Over the course of the past several years, the economic environment has undergone substantial adjustments, which has resulted in price increases across a variety of industries. The pinch is being felt by consumers across the board, from consumer goods to housing to fuel. Many people have the expectation that prices will return to the levels they were at before the crisis, but there are a number of indicators that imply that prices may never return to their previous levels. It is essential for consumers, politicians, and enterprises to have a solid understanding of these issues in order to successfully navigate the new economic environment. Number 10. Supply chain disruptions. When the COVID-19 pandemic occurred, it brought to light and aggravated gaps in supply chains around the world. Several factors, including lockdowns, labor shortages, and transportation bottlenecks, caused disruptions in the flow of goods, which resulted in shortages and increased costs. It is possible that the immediate effects of the pandemic will fade. Nevertheless, long-term adjustments in supply chain tactics, such as reshoring production or diversifying suppliers, may result in an increase in costs that is permanent. It's possible that businesses won't be able to completely return to the supply chain models they had before the epidemic in order to keep their pricing higher to support these new operational methods. Number 9. Labor market changes. The labor market has undergone substantial upheavals, and as a result, many workers are reevaluating the conditions under which they are employed. Due to the fact that this phenomena, which is also referred to as the Great Resignation, has caused labor shortages in a number of different industries, wages have increased as a result of businesses competing for a smaller pool of job applicants. Despite the fact that increased salaries are advantageous for workers, they also contribute to greater production and service costs, which are frequently passed on to customers. Because workers are demanding greater wages and improved working conditions, it is highly unlikely that these higher operational expenses will be reversed. Number 8. Inflationary pressures. Inflation has been a big issue as central banks all over the world have been struggling to keep it under control. Price hikes have been caused by a mix of factors, including pent-up consumer demand, interruptions in supply chain operations, and excessive fiscal policies. In the event that inflation rates remain stable, the price levels that were established during periods of inflation have a tendency to remain. As a result of this tendency, which is referred to as price stickiness, businesses are hesitant to drop their prices once they have been raised. This is partially due to the costs that are connected with frequent price changes, as well as the psychological assumption that prices will normally trend upward. Number 7. Energy costs. The cost of energy is a crucial factor that is considered when determining the prices of goods and services. It is vital to make the transition to renewable energy in order to address climate change, yet this move requires significant investments up front. There is also the possibility that geopolitical conflicts will cause fluctuations in the prices of oil and gas. Due to the fact that the globe is currently dealing with energy transitions and political uncertainty, it is quite probable that the costs of energy will continue to be high or even increase. This will have an effect on the pricing of almost all goods and services that are dependent on energy for supply and distribution. Number 6. Monetary policy. In order to battle economic downturns, central banks have poured unprecedented quantities of money into the economy through quantitative easing and other methods. Despite the fact that these measures have been successful in boosting demand, they also contribute to the accumulation of inflationary pressures. Because interest rates are currently at levels that have never been seen before, the power of central banks to combat inflation is severely constrained. In spite of the fact that central banks are working to normalize monetary policy, the prolonged impacts of prior expansions can continue to keep prices at a high level. Number 5. Technological advancements in automation. Although technology advancements in automation have the potential to lower costs in the long term, the initial investment that is necessary for these technologies can cause prices to increase. There is a possibility that businesses that embrace new technology may pass on to customers the costs of research and development, as well as implementation. In addition, because of the quick pace of technological advancement, it is necessary to perform continuous updates, which results in prices that remain high. Number 4. Real estate and housing costs. The prices of housing have skyrocketed in many regions of the world, which can be attributed to the combination of cheap lending rates, high demand, and supply limits. The cost of land, construction materials, and labor have all grown, which has resulted in the construction of new homes becoming more expensive. These increased costs are reflected in the prices of both the rental and the purchase. Due to the fact that housing is an essential requirement, the rising cost of housing is a contributing factor to the overall increase in the cost of living. Number 3. Climate change and environmental regulations. The repercussions of climate change and the actions taken to resist it can also drive up prices. This brings us to the 8th point, which is environmental regulations and climate change. The disruption of agricultural production caused by extreme weather occurrences results in an increase in the cost of food. Despite the fact that environmental rules are essential for ensuring sustainability, they can cause firms to incur higher operational costs. It may be necessary for businesses to make investments in environmentally friendly technologies, environmentally responsible practices, and compliance measures, all of which may result in increased costs. Number 2. Global trade dynamics. Tariffs, trade wars, and protectionist policies all have the potential to drive up the price of commodities that are imported. When nations reevaluate their trade agreements and place a greater emphasis on safeguarding native businesses, it is possible that consumers will be forced to pay higher costs for imported goods. Furthermore, disruptions in global trade routes, such as those induced by geopolitical conflicts or pandemics, can lead to increased expenses associated with shipping and transportation, which further drives up prices. Number 1. Consumer expectations and behavior. Expectations and behavior of customers. The behavior and expectations of customers are extremely important factors in the pricing dynamics of a product or service. Consumers frequently anticipate that prices will continue to rise during times of high inflation, which can lead to a situation in which there is a self-fulfilling prophecy. In order to meet the expectations of customers and preserve their profit margins, businesses may choose to maintain high prices. In addition, the trend toward luxury products and services, which is driven by transformations in the preferences and lifestyles of consumers, might result in prices that remain high for an extended period of time. In order to satisfy the expectations of consumers for products that are of higher quality, created in a sustainable manner, and ethically, businesses may decide to charge higher prices. In addition to the efforts that individuals and groups are making to adjust to increased prices, there is a growing realization of the necessity of making structural reforms in order to address the underlying causes of inflationary pressures. A part of this involves reevaluating policies and practices that have been in place for a long time and have the potential to exacerbate price increases and impair economic stability. One area of concentration is the global supply chain, which has been considerably disrupted by occurrences like as the COVID-19 epidemic and geopolitical tensions. This is one subject of attention. In order to address vulnerabilities in the supply chain, a multidimensional approach is required. This approach should include diversity of sourcing, investment in domestic production capabilities, and enhancement of resilience to external shocks. The ability of economies to better withstand shocks and lessen the impact on pricing can be improved through the construction of supply networks that are more robust and flexible. Furthermore, controlling inflationary pressures requires resolving structural imbalances in the labor market. This is a key component of the solution. The elimination of salary inequities, or the promotion of a labor market that is more dynamic and inclusive. Economies have the potential to attain higher levels of productivity and efficiency, which can help ease the cost pressures that are being placed on businesses and consumers. Share your opinions with us in the comments and subscribe for more.